All right, ladies and gentlemen, welcome back to another episode of a trading recap with Jonathan Sandoval. No, but for real, you guys, thank you guys so much for coming back. If you guys do come back, and if I'm just talking to myself like I am right now, then hey, it is what it is. But I'm sure at least one of you guys are gonna watch this, so thank you guys for coming in. If you're not subscribed to the channel yet, please subscribe. Um, so this video is gonna be a little lengthy in regards to my intro and the whole video. I'm gonna be going over my past 2 weeks of trading, which I'm down $90. What I've noticed is that my trades, my trade losses have been getting bigger every month, and that's not good. So there's something that's bad in my process, which I've already figured out, which is my size. Um, but I'm gonna be going over more of that in detail in the video. Now I'm only about really I'm gonna be completing my second full month of live trading. So this is very interesting to see, going from paper trading, trading with fake money, and then going into the markets and trading with live money. Not only that, but paper trading when the market was at its highest and most volatile, and then now trading with real money when it's not as volatile. Um, volatile. I don't know. Um, but yeah, so there's a lot of lessons to be learned. There's a lot of lessons I am learning. Um, and with these losses, it just comes with the price. Now, obviously, I can control that price, which is something that I need to do a whole lot better. But I'll get into that more once we get into this video. So, again, thank you guys so much for coming back. I really appreciate it. I do feel a little nervous making these videos every 2 weeks. I feel a little uncomfortable, out of my zone. So, I apologize if I feel a little awkward during this video. But other than that, you guys, I'll see you guys in there. Alright, what's up, you guys? So, disclaimer. If in any part of this video you see a big pile of clothes behind me on my bed, you guys just mind your business, okay? Okay. I'm glad we could agree on that. So anyways, you guys, thank you guys so much for coming in. So let's just jump right into it. In the beginning of my intro, during my intro, I said that each month I've noticed that my losses in my trades have been getting bigger. And it's because of the size that I'm taking. But it's not only because of the size I'm taking, but it's also because I may be over trading. I've created myself bad habits from the hot market. That's kind of like iffy. And the good thing about this is that you decide on whether it's iffy or not. No one else is gonna tell you that, like, hey, you have bad this and that because of the hot market. And it's very counterintuitive, and I'll tell you why. Let me actually write that down, because I know I'm gonna forget. Bad habits from the hot market, and I'll tell you why. That's kind of like, no one can tell you whether you have bad, like, this trading thing is a game of, like, self-reflection in literally every single way. What I mean by that is, if you're lazy in real life, you're most likely going to be lazy in the markets. If you expect something fast to happen in the real world, like, whatever you want, and you expect it to happen fast in the real world, and then you come into trading, it's going to be the same exact way. And I'm not saying it can't happen, because it can happen. Like, you could scalp and make quick money, but in order for you to, like, learn the strategies and know when to scalp, when to go in, so on and so forth, that's not going to happen fast. So, okay. Now I'm just rambling. Like I said, I'm sorry if I'm a little awkward during this video. It's been a minute since I've made a video, about 2 weeks, so I feel a little awkward. Okay, so what have I learned? I've learned that I don't need to trade as much. Okay, I actually just added that, but I'll go on to the other ones. Not emotionally entering a trade. I just added that one as well. Not to be too emotional about losses. Now, what I have to say about this one is, I've only been trading live for 2 months. Okay. The past, I don't know if I'm accepting losses better, or if I'm just getting used to losing. That's all I'm doing right now, is losing. But I've learned not to be too emotional about losses. Okay. The other one is, be aware of what side you're trading on. And what I mean by that is, am I on the long side or am I on the short side of the chart? No. Well, actually, a better way to express that is, am I on the front side of the chart, or am I on the back side of the chart? So I've learned to be more aware of that. I've learned that my starting size should be my full size, at least for now. And what I've learned in watching, Trading Tickers 1, Trading Tickers 2, and just listening to other successful traders trading recap videos, when they start off with starting size, so they don't start off with their full size. So what I've realized when I'm trying to adapt this to my trading, is not starting off with full size. My full size should just be my starting size. I shouldn't have a full size. I should just be a starting size, since I'm so new into this, especially trading with live money in this market. So I've realized that. Okay, the other one is I'm seeing the patterns and I'm on the right track, but my timing is off. So I see the patterns, I'm on the right track. My timing is just off on when I enter these trades. Either I'm too late, or I see it happen and I don't enter, so I'm hesitant. Or I see these trades, because I really only trade during the morning, and then during midday I try not to trade if I'm there for midday, but then towards the afternoon I'm gone. So what I've been doing is I've been kind of calling these trades for like the whole day, and that's another thing that I need to put is finding what I like, finding my trading style. So I'm seeing the patterns, I'm on the right track, but my timing is off. So every night before, I realize it's a lot harder for me, not necessarily harder for me, but when I make my watch list there's a pile of clothes. When when I when I when I make when I make my watch list at night, not that it's harder for me to see what's gonna happen the next day, but I feel a lot more comfortable seeing what's going to happen after the first 30 minutes to an hour, and what's going to happen throughout the day. It's easier for me to, I guess, call the shot on what's going to happen for the rest of the day. And the great thing about it is I'm either right or I'm wrong. And then there's sometimes in between. So like what I mean by that is if there's an OTC, and I'll show you this one because I'm using this as an example. As an OTC, morning panic, it dips, but it doesn't get to its highs, but it starts consolidating near its highs, and it's above VWAP. My call on that is it's going to be an OTC swizzle. Towards the end of the day, it's going to break out to new highs, and then whatever happens towards the end of the day, depending on the history of it, that's a different story. That's getting into the next day. But for the intraday, morning panic, dip, dips nears its highs above VWAP, consolidates all day. Towards the end of the day, it starts breaking out to new highs. So it's easier for me to call that than actually call that the night before, because the night before I could just only call, okay, it's going to gap up, and then it's going to spike, and then it's going to dip, and then I don't know what's going to happen after that. Or that could just completely not happen. So like I said, I'm either right or I'm wrong, and then there's that in between. But if it's the next day and I'm trading, so pretty much what I'm trying to get here to you guys, so I don't need to be bullshitting, is I only trade for like the first two hours of the day, and then I watch the market for half of for like another hour, maybe half an hour, and then I go to work. So I'm not there for the end of the market. So what I do while I'm here for the first 2 hours, 2.5 hours, I call what's going to happen to that trade or other trades that I'm watching. So then once I come back at the end of my day, I'm able to see, was my call right or was my call wrong? And I've noticed that not every single time my call has been right, but I'm not saying that I'm not always wrong either. So I think that's what kind of keeps me in this game, is that I'm seeing the patterns, I'm on the right track, it's just my timing is off. So there's a lot of intricate stuff that I need to figure out while doing this, and I'm up for the challenge. Okay, so the next one is talking with other traders online helps. So I've been talking to this to this guy named Logan. Logan, if you're watching this, thank you, man. I appreciate you watching this, and I also appreciate our conversations. I've been talking to him. He trades different patterns than I do. I've traded the patterns that he's trading, but paper trading, and then in the hot market as well. Um, so I'm able to, understand what he's talking about. And the way he expresses to me on how he maps out his trades and the psychology behind it and so on and so forth, it really, really helps me when it comes to my trading. So I'm sure this isn't the first time that you've heard, from me, or from traders that are actually successful. Connecting with other traders helps, and I know, doing everything online and trading with other people online, it may be a little bit uncomfortable. And when you're sharing too much, when you're sharing too little, you don't want to ask too many questions. You don't want to over bombard them with anything. I understand that, but just reach out to other traders and see, kind of push the buttons so you could know what's too much and what's not too much. And what I mean by that is me asking Logan, like, hey, what did you think here? Why did you cut here instead of here? What was your price target? So on and so forth. Where do you look at for news? I'm doing this, that, and the third, and then from their responses, see if you're asking too much, and then if you are, I mean, cool, it is what it is, and then just keep on moving and talking to other traders that you feel more comfortable with. Okay, so keep your losses small, which means smaller size. Self-explanatory. I want my losses small. I need to trade with smaller size, or I keep a tight risk. And that goes into the next one, is finding my trading style. And what I mean by that is, because of my schedule, and because of the data that I have been gathering over the past 2 months, I'm trying to find my trading style. Because when I was paper trading, I was able to just go all day and watch the markets because I was on unemployment. So I didn't need to worry about going to work. So I was able to give the markets my full time. And I'm not saying that I can't do that right now, because I could work around the market schedule. But just for me, for what I need for right now, for the next 2, 3, 4 months of my life, I need to be actually working more than being here at the markets. So finding my trading style, it may come in seasons. Sometimes I may need to work a lot more and not watch the market as much, or I can watch the market for the full time, and then I'm still able to get what I need to get done throughout the day in regards to paying my bills. So it just comes in seasons. And what I've noticed about that is one style may not fit all for the whole entire year or for my schedule. So finding my trading style is, if I'm only here like I've been for the only 2.5 hours of the day, I need to either, and this is where I don't need to trade as much, and not emotionally entering a trade comes in, and actually what I need finding. I need to, here, bear with me, you guys. I got you guys. I need to become clear on my setups. So check this out. I know this is mumble jumble. I don't expect you guys to understand this right away, especially if you're new, and if you're kind of an experienced trader, then you may understand what I'm talking about here. But if I'm only able, if I'm only able to watch the markets for 2.5 hours a day, that means my setups will only be a morning panic dip buy, or I could swing an OTC swizzle. Because even while I'm at work, I could still pull out. I could pull over. I could pull out my laptop, exit a trade, whatever the case might be, and I'll be okay. And then for this, I can set in a stop loss. But I have not used a stop loss yet, to be honest with you guys. And pretty much what a stop loss, pretty much. Ooh, man, I need to calm down because I'm trying to run through this video so I won't waste your guys' time. To be honest, but I need to slow down. Let me drink some. I haven't used a stop loss yet because I've heard that the market makers, they see your stop loss and then they pull the stock down to that stop loss, and then you exit, and then they exit you out, and then the stock ends up going up to do what you thought it was going to do, right? So that's why I haven't used a stop loss. So I need to experiment with those. But check this out. So as I was saying, so since I could only trade for the first 2.5 hours of the day, that means I'm only going to be able to trade morning panic dip buys, or I could swing an OTC swizzle. Other than that, that's pretty much the only setups that I could trade. Okay. Now if I'm there for the whole day, now that's different, because then that means I'll be able to play dip buys. And then also that OTC swizzle, but that's really towards the end of the day, because if I'm being honest, I do not want to sit in consolidation. It takes a lot of patience. It's not that bad, it just takes patience. But I would rather not sit in an OTC swizzle in the consolidation time. So yeah, so if I'm only able to trade these two things, I need to become clear on what my setups are. So what does that mean? Okay, well, what do I need? What's the criteria for a morning panic? And I need to become clear on this. And I'm not going to become clear on it right now, but I know that this is something that I don't have in writing. Like, okay, well, my criteria for a morning panic is it ended at its highs the previous day. It's near a 52-week breakout. It needs X amount of volume. It needs X amount of trades by X amount of time. You know what I mean? I don't have that. The only way how I'm trading these is, morning panic ended near its highs, or is it's at its all time highs. It panics, pick up the hit, sell, right? But that's not working for me, at least. And the reason for that is because the bad habits from the hot market, what I do is what I learned in the hot market, since I started in the hot market, is waiting for a play to prove itself. So if it panics, I see a green candle, depending on how volatile it is. No, if it's not a nice green candle, then I wait for the next one. But sometimes that next one is the big one, and then that's when I enter, emotionally entering a trade. And then it only goes up a couple more cents, and then it ends up coming back down, and then it consolidates, or it does whatever it does, but I didn't take that meat of the move because I was waiting for it to prove itself. But then once it proved itself and I entered, that was the move. And I've realized that's not good, and I need to pay more attention on when the actual move happens. On whether it's reading more level 2, or maybe it's just paying more attention to the price action, or maybe it's maybe some news came out, and that's another thing. I need tools. I need to go back to using stocks to trade scanners and breaking news. But this comes with the price, ladies and gentlemen. This comes with the price. So in the new year, I need to start paying for that again, because that was a big help. That was a big help. Because sometimes the news that you have, I use Yahoo Finance, and then also it comes out on E-Trade. But sometimes the news it's not as instant as the breaking news on stocks to trade, and a couple minutes, an hour, a couple seconds can make a big difference. That's for sure. So it's something that I just need to invest in. But going back on becoming clear with my setups, I don't necessarily have a clear setup, a clear definition, a clear criteria of what makes that setup. There we go. I don't have a clear criteria of what makes that setup, so that's something that I need to be clear on. And probably, to be honest with you, that's something I'm gonna be talking to Logan about. So Logan, if you're watching this, I'm gonna hit you up on that. All right, so I think that's it. Video's not done yet. Haha, psych motherfucker. You guys thought. 18 minutes into this, I told you there was a lot that needed to be said. Okay, so now what I'm gonna do is I'm gonna go into my charts. I'm gonna go into my actual trades for this, for these past 2 weeks. Okay. Yeah, I was having trouble opening my downloads with Siri. So what I'm gonna do is I'm gonna show you guys, a couple different charts. But with that being said, let me show you guys this. Can you guys give me 1 second? Hold up. Sorry guys, 1 second. Alright, so I'm down $150 for the month, which is not good. See, September, I did like one trade or something. I don't know where it's at. Oh, it's right here, but it's red. It's Monday. Let me see. Yeah, down $14. September down $14. Excuse me, sorry, nasty. I know. October down 71. And then this month down 150. Yeah. So let's see what the heck is up. So the first trade what I'm going to be showing you guys is open date. Oh. The first one I'm going to be showing you guys, AABB. I think this is no. Where's AABB? Here we go. I'm going to be showing you guys this one. So I was playing a morning panic dip buy on this one, negative 13. The mistake was there was no bounce. Let's see if that comes true, and that is true. There was no bounce. So if you actually want to say, I guess there was a bounce, and this is a perfect example. So you see this is the move. I was waiting for it to prove itself, and I don't even know what the fuck this is. This is just a terrible trade, but ideally would have gotten in here, up here, and I know that doesn't look much of a move. And what my problem is that I see like Tim Sykes making these trades, right? He makes like couple grand, right? And so I go into it with my size, and I make like $3-4. So then what I do is I oversize into the position, and I see like $12-14, and it's still not enough for me. So then I don't sell because I expect it to break these morning highs and go up, and it doesn't do that. So then I end up cutting for a loss, and that's what my problem is. So that's what my problem is. But yeah, anyways, negative $13 right there. Next one I'm gonna be going over is gonna be Vuzi, VUZI. Oh. Also, what I want to put on here, another thing that I have learned is become more aware of what the company is and what sector it's in. This is huge. Become more aware of what the company is and what sector it's in. Reason being is because I've also learned that before you go into a trade, what's your risk? What's your plan? Being aware of what sector the stock is in. What sector the stock is in. What's your risk? What's your plan? What sector the stock is in? And then what's your exit strategy? Because your risk is what your risk is, and then your exit strategy cannot also mean what's your risk, but also how do you plan on taking your gains? Because a trade is not a trade unless you fucking take your gains. Other than that, you're just in it. So let's go to Vuzi. So this one is another leg up. And this is another example of getting bad habits from the hot market and missing the actual move. So check this out. So dips, fucking dips and rips. That's beautiful. That's the actual move I should have gotten. Um, Came back down, tried to dip again, new lows, nice bounce. And what I was looking for was another leg up. Because in the hot market, what it would do this, consolidate for a couple more minutes, maybe 5-10 more minutes, and then it'd rip up for another leg, and then it'd do whatever it do. And what I've been learning is that usually when that happens, it's because it's a short squeeze. And my idea of short squeeze is when it actually happens in the stock, I need to become a little bit more knowledgeable of that. But anyways, so this is the trade where I was just looking for another leg up. It didn't happen, so I cut my loss. One thing that I have been doing good is cutting my losses. I've just been taking too much size. And I may be wrong, but let's see. But for those last two trades, I've been good on cutting my losses. So this one, I was playing a breakout, and this one was a good trade, but what happened was, this one was a good trade. So there's this happened, boom, boom, started consolidating, trying to break this. I was like, okay, there's volume going on. All right, let me enter. Let me take a small little size, right? And then did I sell right there? No, I didn't. So bought, consolidates a little bit. My risk is this right here. It's holding, so I'm like, okay, cool, let me add. And then this happened, and I'm like, fuck yeah, let me get full size. And when that happened, it ended up going down, and I did not stick to my risk because my risk was supposed to be this. But since I was already in full size, I did not like this amount right here, so I exited. And what ended up happening for the rest of the day is I ended up just doing that. But this is what also gets me, is that when I look at these charts like this, well, that's kind of obvious. That's a beautiful, nice breakout. Take your take some of your profits off, right? But then when I zoomed in, it doesn't really look like that big of a move. You know what I mean? Consolidate, and then another one. So that's that one. No, I'm fucking talking my head off, you guys. I'm so sorry, but I really hope that when I do become successful at this, and there's a new trader watching my trading recap who's in as long as I've been in, or maybe even less in this, because I'm fucking an infant, maybe these videos will help. And this also helps me. So that was Vuzi, V-U-Z-I. Let's do M-R-A-M-I. Or M-R-A-M. This was a $14 loss. I think I just went over that one. Yep, that's the one I just went over. M-R-A-M. TRT. It's a 45-cent loss. I don't think I need to go over this one. This one's just late to the party. I was trying to do a nice consolidation buy, break out another leg, but that didn't fucking happen, so I just took a small loss on that one. Whatever, it is what it is. Late to the party, another leg up. Let's go over some more of my recent ones. So this is Smurf. This one was yesterday. I should not have gone into this one, but my call was right. I was not trying to go into this one because it's an OTC, and with OTC there's commissions, and I did not have enough buying power. I want to at least go into an OTC with $500, and I did not have $500 of buying power, so I was avoiding OTCs at all costs. I mistaken this with as a listed stock because of the price. That was my fault. Check this out. Morning panic. Waiting for it to prove itself. Got in. Not a lot of liquidity, not a lot of volume. It is what it is, but I do know that these stocks can make moves, okay? So I got in here looking at this. Nice. And I'm looking at my profit and I'm like, well, I should be up, I should be up quite a bit. And I wasn't up a lot. And I was like, oh shit, am I in OTC? Am I in a OTC? And I looked at it, I'm in a fucking OTC and I'm not up as much because I have small position and I still need to cover commissions. So I'm like, fuck, that's why. So I was all like, well, I'm already in the trade. And it ramped up nice little gap up here. Came back down. And I'm like, well, fuck it, let me just use the rest of my buying power if I'm just gonna be in it, right? So I got in it, and right here during this, I'm like, I'm feeling nice about this. Cool, OTC swizzle, it's holding up really nice. This comes back down. It hit my wrist barely. It didn't even go past my wrist. It hit my wrist. And I was like, all right, well, that's the time I'm out. But while I was in it right here, OTC swizzle. And the reason why I exited was not only because it hit my risk, and with this I could have had a bigger risk. And if I would have, look at that. That would have been a nice game for me. The reason why I did it is because with these OTCs, as you guys have seen in my past charts, it could just go down, a bloodbath. But that's only if there's a lot of volume and a lot of liquidity. And there wasn't here, and I didn't take that into consideration. And I do believe if I would have taken that into consideration, I would have held. Because immediately right after it bounced back, and then it started, highs. I would have been up, consolidating, and then broke to new highs like I thought it would, because that's what an OTC swizzle does. So a little frustrating looking back at that today, but no, whatever. It is what it is. What's another one I want to go over? I want to go over this one, BFRI. This one was this one was fucking stupid, you guys. So with this one, I was reading the percent gain instead of the money gain, which is why I didn't sell right here, up here, because I was looking at the percent gain instead of the actual dollar gain. So I was up like, 2, 3, 4. So I was like, fuck, I'm only up $2, $3, $4. What the fuck? I don't want to scalp this. You know what I mean? I want a bigger move. But since I was looking at that instead of the actual money gain, I didn't sell and I added, and then I ended up having to sell right here before this bloodbath. So, yeah. So I think that's it, you guys. I don't think there's anything else that I really want to go over. I'll go over ELEK. Made $50 on that one minus commissions. It's like $37. And this one I should not have gotten in. This was an emotional trade. This one was a bad win. So look at this. Definitely a chase. Got it right at the top. And then it dipped. And I saw my account down like $60. And I was like, fuck, I can't be losing $60. I was like, fuck it. If I don't lose $60, let's just have it go to 100 then. And it ended up bouncing, and I ended up getting out. Nice exit there. So yeah, this one was a bad trade, but it was a profit. Emotional trade. I chased it. Everything bad about it. Midday breakout. Let's do SEV. Midday breakout. Trading midday, bad chart reading. So I went over this one on my Instagram. So I was playing the intraday breakout, but did not take the time of day into consideration, which was midday. So then I ended up selling immediately. Okay, the breakout at 30. Oh, that's number 3. If I had buying, so what I was doing is I was buying this breakout at at 30. I wasn't really counting this, which I should have, which is why I also put bad chart reading. Because if I would have been playing this, I would not have entered here. Okay? I would have entered around right here, ideally after this candle, to be honest with you. Ideally after this candle. Right here, I see it hold, and then boom. My risk probably would have been the previous breakout right here. So keep my risk tight, and that would have been a nice little game. So if I had buying power, this would have been the ideal entry for the breakout since it had time to consolidate and prove itself. Plus last hour and a half until market close, aka most volatile. So as you can see right here, my cursor is very, very volatile. Right, it starts to fade off, and then it kicks back up. Let me go over one more for you guys. DWAC. This is Trump's play. This is Trump's sympathy play, I believe. What was I trying to do here? I was trying to play this dip. So 9:30, nice run up in the morning, dip. I was trying to get that. I didn't sell, and I ended up adding right here. Why I don't know. Stupid position, and a stupid sell. So this was just a nice. This was just a chase. This was just a chase all around. And now that I have this, because I saw the triple top there was one that I wanted to add, which I believe it was this one, this BFRI again. I'm glad that I traded this one. Reason being is because I saw this triple top, and it only broke out a little bit, but I saw it on the level 2 and out in the price action, and I'm happy that I was able to see that because I was watching a live trade from Matt Monaco, and it was trying to break to new highs. Let me go back to my face because this is going to be the end of the video. So, and it was trying to break to new highs, and level 2 tried once, twice, and then the third time it didn't happen, so we ended up selling, and then after that third time it ended up just going down, and it didn't break out to new highs. Not only in that, but also in trading tickers with Tim Gratani. If he's up on a position and it's already broken out, if it's broken out once, comes back, that second time he'll pay himself, and then he'll wait to see if it breaks out, and if it doesn't, then he'll just go on with his plan. But the reason why I say that is because he'll pay himself as it's about to break out, just in case it stuffs. And usually when it does, that's good. The reason why it pays himself. So, damn, said a lot. That's it. Thank you guys so much for watching. I hope you guys have a great one. I hope you guys learned a lot, as much as I've learned a lot from my trading these past 2 weeks. But have a good day, you guys.